Now let's bring in Vista Equity Partners, Head of Equity Capital Markets, Ashley MacNeill. Welcome back.
Thank you.
Good day to have you.
It's a day.
For us, anyway. I don't know about for you. I mean, what is going through your mind when you see this?
I mean, disappointment because things are worse than we had anticipated, but at the same time, sort of being prepared and excited about what the future holds. We sort of have a moment in time. It's not the clearing event, as you've pointed out, and it's obvious we're not going to get the clarity we're craving. And so we're entering a world of predictable volatility like we've spoke about before. And so it's just about figuring out defensive places to put position money and also to look at various sources of capital and where will the capital be coming in the future.
When you talk about defensive places to put capital, I mean, what kinds of things are you thinking about? I mean, what should our investing viewers take from the space you specialize in, especially tech? I mean, you guys are such a software-heavy firm.
Yes.
The kind of investments that you make in enterprise software, and you all have done quite well doing that. What sort of wisdom would you impart on our viewers because of that?
Well, first and foremost, it's one day. So we just have to take a step back. We're long-term, long-duration investors, and the public markets only represent about 5% of our investable universe. So that's part one. So looking outside of the public equity markets is something that we do on a frequent basis. Part two is we fundamentally believe software is a defensible sector. And if you look at other time periods of market dislocation, it's been a great place to go. But you do have to look for specifics around these software companies. So you're looking for durable growth that has survived other periods of dislocation. You're looking for defensible sectors. I've heard some of your guests talk about, generative AI, but I would think of like cybersecurity or vertical SaaS. And then data moats, because what's going to happen with generative AI is so up in the air right now, given everything going on, you want those data moats.
Given that, it's a one-day really, bad market day, but it's been more than one day, right? We've pulled back a bunch. If this continues, and I mean, multiples have already compressed in enterprise software along with everything else in this market.
Yep.
Does that continue more than likely if this level of predictable volatility and uncertainty continues?
I think it's, look, we're around normalized valuation levels, at least we were kind of in March as we headed in. And you had Brad on earlier talking about us being at like 2016 lows. I think it's a fantastic time to be deploying capital in software, but I do think you have to check into your duration and you need to look for those characteristics I outlined.
I think everybody is quite obviously just sort of rethinking where we are versus where they thought we might be at the beginning of the year. Certainly on election night, right? When we did our special programming here and everybody was feeling bullish. Deal making was one of the areas where there was all of this, optimism doesn't even do justice. It was animal spirits, like, let's go. We've been waiting and waiting and waiting, and here we are waiting.
Well, I think my answer might surprise you, but I don't think that volatility and animal spirits are mutually exclusive. And I do think that you're going to continue to see some deal activity in 2025. If you look at Q1, and I realize things have changed, but let's just, look at Q1 for a minute. While M&A volumes were down, tech M&A was up, and global IPO volumes were actually up too. So while I do think that boardrooms and executives are going to be distracted by the volatility and uncertainty, and I do think that's going to take away from deal making and innovation, I still think that there's going to be deal making. It's just going to be more window driven or pocket driven throughout the year. You
feeling like that's part of the so-called good stuff, that investors were all excited about with the tax cuts and deregulation. You still feel confident and comfortable that that's going to happen this year? It's just the timeline has been pushed further off than maybe you first thought?
I have a high degree of confidence that we're still going to see a fair amount of deal making. Is it going to be as robust as we had hoped it would be at the beginning of the year? Absolutely not. But do I think that there's a ton of strategic deals that are still being worked on and in play? Absolutely. I think IPOs are still going to find a home. It's just going to be very pocket driven, and it's going to be in periods where we have more certainty than we have today.
Oh, and companies are staying private much longer. This doesn't do really anything to get them off the couch and go public, does it?
I mean, it's definitely a warning sign.
Yeah.